go. Okay, you guys all see the screen? Okay,
Yeah, we can see it.
Yep.
perfect. Okay, so as people come in, we'll let them in, and but what I want to do is I want to jump into these new programs that are out there to kind of give you guys some knowledge and some leverage and ways that you can actually get a message out to your whoever you're connected to sort of create a sales force, within anybody that you come in contact with. So what we're going to be covering in this particular session, we're going to talk about some of the buyer challenges. We're going to talk about this new down payment shared equity financing program, how it works, when a buyer should be using this program, how to explain it to buyers, and how to leverage the program for leads. Okay. Now, the company that provides these down payments, a company called Arboro, they do a great job in marketing, but what I'm finding is it's very, very difficult. You kind of understand the program, but then it's just now how do you apply it and change your messaging and everything else to actually now get more buyers to come and approach you for this. Okay. Throughout the whole presentation, you'll see these scan for realtor packages. So anytime throughout, you just scan there, you can fill in information and it'll ask you some of the stuff that we can start providing you. And you'll see some of the stuff as we go along. I just put it throughout the presentation because sometimes I used to always leave it to the end and people would miss it. And at the end, I also have my email address and everything as well. Okay. So let's jump into it. And any questions? This is a smaller group right now. Last session we had over 35, I think. What is so smaller group right now? So just unmute, ask questions, interrupt me as we go along. Okay. So I love questions. Now, with that, sort of give you a background. If you haven't met me before, my name is Lauren Andrews. I'm a principal broker of a brokerage called Dominion Lending Centers Expert Financial. Okay. We have been around for a while. Over the last 8 years, we've been nominated for Canadian Mortgage Awards for specifically for the work we do with our realtor partners. Okay. I should have made you co-host.
I can't accept them.
Hmm. Okay, hang on. Let me see if I can figure out how to make a co-hoster. Sorry, bear with me here. Let me go to participants. There we go. Make co-host. There we go. Okay. So yes, we've been around. One of the things we're known for is a lot of the work we do with realtors. I previously have was a broker of record for a real estate company for a period of time. I don't deal with real estate right now. I just deal just in on the financing side. But I also used to teach for a REIA college and helping people get into the world of real estate too. So we do a lot of training for different brokerages. We'll implement the Pathway to Mastery Buffini program and everything else just to help build up skills within our realtor partners. One of the things, so I have about 45 agents that work within our umbrella. And what we really do is train them to help develop with our realtor partners to help develop your business. Because at the end of the day, if we can help you be more successful and bring programs like this that's going to help you close more deals, we'll get a chance to do more financing. So we need you to be successful before we are. And that's kind of how I built this whole brokerage. And that's why I will share whether you're working with another mortgage broker or what, it doesn't really matter. I want you to be able to help more people get into homes. Okay. So that is kind of where we're at. I think I'm going to skip the polls here. I still got people coming in. Are you admitting them or should I admit them? There
Sorry,
we go.
I'm just messaging back on.
Okay, no problem.
I can admit them.
No, it's all right.
I got it.
Okay, it's already got. Um, so okay, so what I'm gonna do, I have a couple of polls to figure, how long you've been in the game and if you've heard about this program. But I'm gonna assume you only know a little bit about this program, and we're gonna kind of go through the way I want you to think as we go through this, because I want you to have a mindset. And here's here's the issue that I have is because I'll talk to a realtor partner, say, hey, this is a great new program that helps home buyers get into homes. They can now buy up to 1.7 million with 5% down. And automatically you think, okay, who do I know that is in that situation? And I want you to get rid of that mindset. I want you to understand what this program is And once you understand what the program is, anybody that you connect to when you're in conversations, I want you to say, whatever reason you have the conversation, and I need you to do the whole Brian Buffini thing. Oh, by the way, there's a new program that's now helping new buyers get into homes. They can now buy up to 1.7 million, 5% down. Who do you know that could be looking to buy a home or want to get into a home that is struggling with down payment? Okay. So the reason why I want you to think of beyond your the initial contact, but I need you to dig into the sphere of influence that people may know. And when I've had these conversations and I've just added that to the end of a conversation, um, all of a sudden they say, actually, my cousin's been looking for a home, but they're just kind of waiting and saving, right? And all of a sudden, could you introduce me to them, right? So that message is really, really important. We're going to show you some open house tactics and everything else. The other thing I want to say, because we say, hey, listen, maybe you could close, if you could close an extra 4 deals in 6 months, that would be awesome, especially in the market today. And the reason why everything slowed down is because a lot of the buyers have, kind of get on the sidelines because of where maybe interest rates are and things like that as well, or based on the income and where interest rates are, they're just not qualifying for what they need to qualify for. I'll give you, this is a quote. We're just finalizing a video testimony with this person so I can add in their name and everything else. But this is she works out of one of the Remaxes. And basically she earned $25,000. I earned $25,000 of commission 90 days after learning about this program. My clients who thought they were years away from their dream of home ownership are now living in a home. Okay. So she actually attended one of our training classes. We'll go around to your brokerage or whatnot, and she learned about the program. It took a little bit to understand a little bit. We said, okay, here's how you need to apply it, and then she was able to bring somebody into her world and say, you know what, I can help you get into ownership sooner. Okay, then the idea here is you as realtors and business professionals, and you're also um, knowledge is so important. Okay. And one of the things that, one of our realtor partners that we're doing an open house at the flyers there that we're going to show you later. And they said those words, hey, by the way, we have this new program, grab one of those flyers. And the person looked at them with anger in their eyes and they said, why didn't my realtor tell me about this? Right. So here's why I need you to think about what this program is, how you can use it. And you're going to find that it may cause people to come to you for information about this program. And maybe they don't even need this particular program, but the program is creating the conversation, the interest, and attraction to you, because you're the gatekeeper. You're the one that knows how to connect them to get qualified for a program like this. Okay, so I just want to kind of create that mindset. Any questions before we dive in? Okay. So, a lot of times you have right now, and some of the biggest challenges, I did a survey out to some of our realtor partners, and, is now a good time to buy is a great question. And a lot of the buyers, you've seen where the market is right now. So some of the buyers are saying, okay, I'm going to hang on. And maybe you got people you're trying to convince, hey, listen, you should be buying. And they're saying, no, I'm going to wait till the market bottoms out and it's going to go lower. Well, unfortunately, we can never really time the market. And if you look over history, even through recessions and everything else, sure, the pace of homes being sold has definitely been slowing. Okay. But prices are continuing to increase. There was an adjustment. There was definitely an adjustment from, 2021 prices. But I can see where that adjustment now we did that adjustment. Now I can see things starting to come up. And then with recent information that's, coming out saying, hey, listen, I think we're at the peak of where our buyer or where the interest rates increases are. And I think we're going to be expecting some rate decreases by the end of the first quarter next year. So as a buyer right now, if everything's adjusted and you're kind of getting in at a good level, and sure, interest rates are higher right now, But we have to remember you marry the property, only date the rate, and the rate will come down, properties will go up. And as soon as those rates start coming down, and if they come down to a certain amount, you guys know the situation with the inventory where it was, in 2021, where it was, 10, 15, 20 offers, on homes, and prices got pushed up, buyers got pushed out. Okay. So I would say, yeah, now is a good time to buy. Now, problem is where interest rates are right now. There's that good old stress test they talked about, right? And you got this stress test that came out that said, okay, whatever the interest rate is, you've got to add 2% above it, and this is how much you're going to qualify based on the stress test, right? So here I have an income chart. So basically, this is if you look at the combined income chart here, and this would be oops, this one, and I gotta do it here. There we go. Okay, so $100,000. Okay, so basically, $100,000 is about $360,000 purchase price right now if you have less than a 20% down payment. And this would be your minimum down payment column, okay, of what you would need. And then it goes up from there. 130, you got maybe 500,000, 160,000, 160,000 per year. You're up to 610,000. So even with good solid incomes like 160,000, you're still getting priced. It's hard to price in the GTA market anyway, depending on what they're looking for. All right. And a 200,000 combined income, if you have, minimum down payment, you're going to get to $820,000 as a max. And I'm showing you this right now because in a couple slides from now, I am going to show you when you have a full 20% down payment or use a down payment assistance program, shared equity financing program to get that 20% down payment, it's going to dramatically increase your purchasing power, okay? Which could make the difference of you getting in a home today versus you getting in a home, if you don't use this program, maybe getting into a home 4 or 5 years from now, okay? All right. Excellent. So I'm going to jump into so we're going to talk about shared equity. So Arboro is a company that's come out with this program, and when I met them, they all look like they were young, like they looked like they were living in their parents' basement trying to figure out a way to get out. They came up with this really really great program, and OFSI, which is the office superintendent for all the financial institutions, approved what a shared equity financing format well over a year ago. Okay. So they came up with this program where it's okay, now we can offer a down payment assistance that goes not like the government one where they used to CMHC had, you put 5% and we'll put 5%. And when you sell it, you pay us back 5% of whatever the purchase price is. Okay. The issue with that program, it had a whole bunch of other restrictions to it. So your mortgage couldn't be more than 4.5 times your income and everything else. So nobody was really qualifying in the GTA, right? And you would actually qualify for more if you didn't even use this program. So having the full 20%, what happens is now we eliminate CMHC and the insurer because it's a 20% down payment, right? So now it allows you to expand much more beyond the limitations that a program like the CMHC had. Okay. So let's get into this. So shared equity financing, what is it? Is basically it closes the gap, okay, resulting in a full 20% down payment, okay, from which, okay, you up to 1.67 million, it is just under 1.7 million. Your clients have to have at least 5%. Okay, so if they have 5%, Arboro, the company that provides this, will give the 15% to give a 20% down payment. Okay, if your client has 10%, then they'll give 10%, whatever the amount is to get that 20% down payment. Okay, it's for owner-occupied properties only. So you people that are salivating over maybe buying investment properties, they don't co-invest in the investment properties. Okay, so just owner-occupied properties only. Okay,
Remember?
what's that?
We can rent the basement.
Yeah, I mean, and you can rent components of that home. You can rent the basement or whatever, but it just has to be your principal residence. Yeah, perfect. Um, all right. So let me show you how this works. So, okay, if Lauren, I got 5%. Okay, I want to buy $1 million home. You're telling me I can buy $1 million home with $50,000? Yeah, you can, right? So how it works is, okay, $1 million, I have 50,000. So anything over $1 million, you always need a 20% down payment. Okay. The lowest price point to use this program is 550,000. Okay, so that's the lowest price. And the highest price, are you letting that person in?
Yep.
Okay. The highest price is 2.5 million. I'll explain how that one works right now. But let's stick with the homes that are under 1.7 million. Okay. So, okay. So I have $50,000 down. I can qualify for a mortgage. I just don't have a full 20% down payment. And I don't have the bank of mom and dad is broke. They're not going to give me money. I just don't have access. So yeah, I'm going to have to wait and save. Wait, you're telling me no, I can get into a home now. How would this work? So if I have 5% down, okay, it's going to translate whatever my down payment is going to translate into an equity share. Okay. So if I have $50,000 of the 200,000, that's 25% of the down payment. I would have a 25% equity share. Okay. Let me do the next slide. So let's say I have a little bit more just to kind of explain it. So let's say I have 80,000. Okay. So now it's 8% of the down payment, but 80,000 of the $200,000 I need is now 40%. So if I put $80,000 down, I would have a 40% equity share. Okay. So the important part I'm trying to stress here is like how an equity split or a shared equity works is based on whatever the down payment is. Okay. And I'm going to explain what it means down the road when you sell it, how that would translate. Okay. So everybody understands this. Any questions, let me know. Unmute, put up your hand, just come out and ask me, please. I love questions. Okay. So let me look at a couple scenarios. I'm going to give you 3 scenarios here. So I'm going to talk about family one. They had a combined income of about 85,000 and $40,000 saved, and they were looking to buy their first condo. So with their 40,000, the maximum they would have qualified for was about 400,000. All right. Using this particular program, okay, it changed their qualification from 400,000 to 570,000 because now they had a full 20% down payment from this particular program. Okay. This changed obviously their purchasing power. Family number 2, and this is one you're gonna come across a lot. They had great income, okay, and they've saved $100,000 so far towards the down payment of the house. Their issue is they had to stay in a certain area. They had 3 kids. Were renting a home for $3,700 a month, so they're spending $3,700 a month on the home they're renting right now. They needed a 4-bedroom home within the GTA or the area that they were looking in. And because they only had $100,000, they were restricted to buy something under $1 million because you need anything over $1 million, you need 20%. But they couldn't find a 4-bedroom home under $1 million. Okay. At $3,700 a month rent, even if they were to double that in savings, it would have took them an extra probably close to 5 years to save the other 100,000. So if they were, and their cash flow every month is now huge because it's a big strain because now you're trying to save that money as well. So it would have took them 5 years. So if they're buying $1 million property, let's say for example, 5 years from now, if it appreciates at 7%, and 5 years from now, that $1 million property is now 1.4 they're purchasing at. And now, so they still wouldn't have enough money because now they need 20% of 1.4 million. Okay. So in this particular case, they were able to jump into a home right away and they bought 1,150,000, right? So that was their price point, what they were able to get into. Okay. I'm going to give you a third scenario how this works. Okay. So you got, I don't know if anybody knows anybody in this call that's business for self, right? I think we all are business for self, right? So listen, so you got the business for self individual, they have a corporation and they pay themselves a salary. Now they pay themselves, I don't know, 80,000, I think it was 85 or something like that, that was showing up on their notice of assessment, right? So, hey, realtors, we do this too, mortgage people, whatever. We want to pay less in taxes. So you keep money in the corporation or you write off or do whatever. All right. So now, but the business itself had great cash flow. They were keeping all their money in basically in the business. So this particular individual said, okay, I got $50,000 available plus my closing costs. All my money is in my business. It'll take me X amount of years to save up my 20% because I want that home. I need the whatever home price it was he was looking for. But what we're able to do this time is just qualify the client based on the business cash flow, basically on the gross business income, and use their 50,000. They were able to get the Arbro's contribution for the 150,000 and buy $1 million home. Okay, so you're going to encounter people like that too. And the reason why I'm kind of showing you these examples, because hopefully you can connect to a family situation where you can say, hey, wait a minute, maybe we should look at this and see if this could potentially be an option. Okay, so those are some of the scenarios. So I'm going to look at, so let's fast forward 5 years down the road, and let's say that $1 million property, we're going to sell it. Okay, so what does this equity share mean? How does it work? And what's it going to translate to? So let's say, for example, and I'm going to round up these numbers, and I'm going to say, okay, we buy it for $1 million. Let's say we sell it for $1.5 million, whatever the time period is. Okay. So what happens here? Okay. And maybe I'm going to go to the next slide because I think it's a little bit easier to explain. Okay. So if we look at the first column here, let me get my highlighter again here, my laser pointer. Oh, that's not working. Hang on. George is on the call. He'd be so happy for me. Okay. So basically I bought the $1 million property, and this is when I put 40% down. So let's say 5 years from now, I'm selling it for 1.5 million. Okay. So the increase is from basically I would get 40% of whatever that amount is. So I would get 40% of the increase and plus my 80,000 I put down originally. So I would walk away with 280,000 of this. Okay. Plus, maybe over those 5 years, I paid $100,000 off on my mortgage because understand is my mortgage, my house, any of the principal payments, I get full credit to that. So let's say I pay that off. So now, after 5 years, I now have $380,000 from that sale that I can now go and buy my next home. So think about it. 5 years and now, 5 years ago, I had 80,000. And I was able to take my 80,000 and turn it into 380,000 within 5 years. Okay, at a much greater rate than I could have ever saved. It wouldn't have been impossible for me to have that type of increase from $80,000 by trying to save money and then purchase at such much higher purchase point. Okay, um, so, and then Arborough would get their particular share, which is 60%, which is 420,000. Okay. So also think of this particular home too, is if I bought it for $1 million and it was increasing at 7%, and 5 years from now, let's say I'm selling it for 1.4. I've already lost $400,000 of equity by not buying, right? So that's why I want you to get past this whole, okay, giving up equity. Don't think about giving up equity. So how much equity am I going to leverage or increase by getting into home ownership sooner? So let's say 5 years from now, I bought it for $1 million, and I end up market changes, I sell it for $1 million. Okay. So I would get my $80,000 out as the homeowner that I put in. I would get $100,000 if I paid $100,000 off on that mortgage. So I'd walk away with 180,000. Arborough would walk away with their original 120,000 they put in. Okay. So that's how much they put in originally. Now, let's say we go 5 years down the road and the value goes from $1 million to 800,000. What happens? Well, we lost that 20%. That equity share is gone. As a homeowner, I still paid $100,000 off on the mortgage, so I still get 100,000, and Arborough would walk away with zero. Okay, so they're sharing the risk of the increase decrease, but it will never go below what the original equity value of that home is. Okay, and what we've seen a lot, because with Arborough, you can also buy up to 2.5 million. You need 10% for that portion. But what I've seen right now is some people that have bought homes in 2021 at the 2.4 million or whatever it is, and then they end up selling it, that value has actually gone down to about 1.8. And if they bought it through Arborough, they've actually leveraged Arborough sharing. Arborough got their portion of that hit in the decrease of the value if they had to sell it, right? So the advantage is increase. It's just on the increase decrease will never go below the equity value of the home. Okay, any questions so far?
Yes, I got a question.
Yay!
So the shareholder, in case the value of the home gets lower, can they say that no, you're not selling the house?
Okay, great question. Great question. So there's never a restriction on selling. Okay, because part of it, understand. So we're also financing this through there's two two banks basically we're financing these from. And banks have certain restrictions, and they don't want restrictions for sellers saying you can't sell at any time or whatever else. So they have to meet the OFC requirements of the lenders. So there's never a restriction on selling. Okay. It has to be at fair market value. So you can't go sell it to Uncle Jim for $40 and say, look, I only got $40. It has to be fair market value. But there's never a restriction on selling. Okay, so you can sell it anytime. I'm going to get into a little bit on that in a second too, on how that works. But that's a great question. Never a restriction on selling. There is a little bit of a restriction if you want to refinance and pay them out, but I'll talk about that in a second. Okay.
Okay. Are these private lenders?
No, we use like banks like Equitable Bank, Community Trust. We're working on a couple more of the A lenders right now. So the lenders are expanding right now. So
Oh,
not private, because even on the if it's done on the alternate side, you can even transfer it to whatever lender you want the next year, because there's no longer that down payment. Like there's still like a lot of the issue right now is for example, if you buy something and you're doing anything with any type of a lender, they'll say, okay, yeah, you can do down payment as a gift from an immediate family member. This is almost like a gift because there's no payments, nothing connected to it. I'm going to talk about this in a second, but there's just an interest in the home. There's no liens, there's no second mortgage, they're not on title. But there's still that gray area of where the down payment's coming from. So these lenders have said, okay, we're okay with this. So they're now accepting it. But if it's not a purchase, then there is no more down payment. You're able to move that mortgage wherever you want, right? In a year,
okay.
2 years, or whatever, right? So some of the other things, closing cost reductions. So basically, if I was going to purchase a home and let's say I had 5%, 10% down, and I'm buying a $900,000 home, I might have a $20,000, $30,000 CMHC or insurance on it. So that gets eliminated. So because now we have a full 20%, so that's done. The other thing too is your land transfer tax. So let's say I put 10% down and I have that will give me a 50% equity share. I would be only paying 50% of the land transfer taxes. Okay. They would pay their 50% of land transfer taxes. And if I'm a first-time home buyer, the rebate would get applied to my side of the land transfer taxes. Okay. So let's look at, okay, what does this mean? Let's go to that first session that we talked about. So remember I was saying, okay, here's our price point. So at $100,000, okay, the maximum we could have got into was 360. But using a program shared equity or having a full 20% down payment, okay, and it goes from, instead of 360, now we can purchase at 550,000. Okay. $130,000 income, 500 was my max if I have less than 20%. Now I'm at 700,000. Okay. 160,000 combined income, 610, now 870. Or if I have a combined income of 200,000, my maximum before was 820,000, but now with a full 20% down payment, my maximum is now 1.1 million. Okay. So definitely what it's done is optimized, or it's increased your purchasing power for your clients. So people that are like, I have less than 20% down, I'm not finding anything that I can fit into or enjoy or imagine even being into at 600,000, because that's how much I qualify for. Well, using a program what if there was something for 870,000? Okay. And you look at the minimum down payment. So let's say, for example, I had less than 20% down. My minimum down payment is 58,000. But with this program, because what happens, it scales, because it's 10% of the portion that's over 500,000. So it's a little bit more. But in this particular program, my minimum down payment can even be less. You get 55,000, 5% of whatever that purchase price is, up to 1.67 million. Okay. Any questions on this? And then the other thing too, like even the carrying costs, I took this out, but if I bought an $820,000 home and I took out the monthly payments, and obviously monthly payments are going to be more than 1.1 million, but maybe 1.1 million has a self-contained basement apartment or something else that can help subsidize, that mortgage payment, and your mortgage payment would actually be less than that $820,000 purchase that doesn't have maybe a self-contained basement apartment. Okay. All right. So the biggest question we get, hey, why would I give up my future equity in my home? And part of it is us guiding people through it and saying, listen, if there's when somebody comes, hey, listen, I'm really interested in this program, we always look at whatever option there is. And I think over the last 5 applicants that we had, at least 2 of them, they had family that we could get money from overseas or everything else. But they actually never would have came to us if the realtor didn't talk about this program, because they were thinking, oh, there's no way to do it. But then, oh, here's a solution. But we're able to find another solution that we're able to not use a shared equity financing. But there's a lot of people that come here that don't have that option. And their only other option is to wait. Okay. Keep saving, waiting, and hoping prices stay where they are, because they'll be always chasing the market. So when we talk about where down payment comes from, different areas. So we talk about savings, immediate family members, RSPs, and home buyer accounts, reverse mortgages. So we have a lot of seniors right now that are using to help their kids or grandkids that maybe don't have financing but don't want to take on a debt. They're doing a reverse mortgage where you don't have to make mortgage payments, but it's rather than them selling the home to help their kids, they can still live in the home. It's like almost a living inheritance, so to speak, and they're helping kids with their down payment. There's the government down payment assistance. Some people have whole life insurance policies. That's where we can get some money from too. But shared equity is now the new kid on the block. Okay, so this is and the other one way of purchasing, which we also do, is rent to own. But if you're talking GTA areas, like this program, I would say is probably better than the rent to own. Because the other thing, and it's not here, rent to own you often go to when there's issues with credit and stuff like that. But even under this program, you can buy with credit as low as how much?
500.
Credit as low as 500. Okay, so even if there's credit issues, you can qualify for these programs. Okay. So Arbro has some really great calculators, and what we're going to do in this next part, we're going to kind of show you some. I'm going to show you how we can get you onboarded so you can start, getting more familiar with this. But here's a really great calculator. You can put in your own parameters. So if I'm buying a home for $1 million, okay, with Arbro, my minimum payment's 50,000 and my mortgage is 800,000. Okay. If I bought it now without Arbro, it'll be $1 million and 200,000 be my minimum payment, same mortgage amount. Okay, but if I said, it's gonna take me 5 years to save. So you're able to say, okay, how much you can say to your clients, how long would it take you to save X amount? Okay. And then you can put an average appreciation. So if I put 5 years at 7%, okay, that means that $1 million home 5 years from now, we can buy that exact same home that you love for 1.4 million. Okay, so $400,000 equity loss. Okay, your down payment at that time, instead of being 50 or 200, is now going to be 280. And the mortgage you're going to carry at that time, instead of being 800 today, is down 5 years from now is going to be 1,122,000. Okay. So they might say, okay, this makes sense. I get it. So, but what happens when I sell? Well, they also have another calculator for that. So you can put in, okay, let's go in the reverse and say I bought now and I sell it 5 years for that 1.4, what would that mean? All right. So if I bought it for $1 million bucks, okay, and I had $100,000 in it and it appreciated 7% 5 years, basically the remaining equity after this calculation is 602,000, okay, of which I'm going to get, and so the mortgage payment is adjusted. I use 100,000 in those previous ones, but right now where mortgage interest rates are higher, your principal amount that you're paying off is going to be lower, okay? So I'm going to walk away with 361,591, okay? This is now my down payment I can put towards the other home. Okay, and often I think about other ways to explain it. So if I took $50,000 and I put it into a GIC that earned 10%, I would have $5,000 in 1 year. Okay. But if I put $50,000 and put it into a home that increased by 10%, I would earn 25,000 on my 50,000 within 1 year, because I'm earning it on the entire value of the home. Okay. So, and we know that's why it's so important. If you can get into real estate sooner, you're going to build up equity, use that equity, and then get to the next home. So main features of this, so there's no liens, there's no second mortgage, there's no loan payments. You can sell at any time. Okay. You do have an option to pay out early. So Dorota, you talked about selling, but if let's say I love this home, I don't want to move, and I want to keep it. So you can have the shared equity match the entire amortization of that particular mortgage, okay? But that's not advisable, right? The best thing is, you think of this home as a stepping stone, maybe 4 to 7 years tops. You want to build up equity, cash out on that equity. Now you have a down payment that you can go and buy something else without using a shared equity financing program. Nobody wants to keep her for 25 years and have the value and then have to share that value, okay? So you should be thinking of, okay, this is, a tool that you're going to help people get into a home now, and now you're going to help them get into another home about, 4 or 5, maybe 6 years down the road, okay, depending on the timing, okay? But it can match the amortization of the mortgage, okay? So the shared Arboro is not on title. There's a beneficiary agreement. It's a Form 118 that ends in the background, almost like a hot water tank heater would. That's in the background, but it doesn't register as a mortgage or show up as a second mortgage as well, okay? Now, this is not available everywhere, okay? And here's the drum roll. So I hope you guys are all in these areas or dealing with clients in these areas, okay? Because right now the locations that they're available is GTA. So Toronto, York, Durham, Peel, Halton, Dufferin, Simcoe, and also Hamilton, London, Kitchener, Guelph, and Waterloo. Okay, so these are the areas. So right now they're looking at areas that they say, okay, we believe where people are coming in, it's going to increase in value over time, right? So they're banking on those. Now, they're going to be expanding. The last expansion I heard is they're going east. So I just don't have word on when that's going to happen. All right, any questions so far? Okay, so now, if this all makes sense, I'm going to show you how some of our realtors are leveraging this program to start creating leads, okay? And
Hi, Lon. Sorry.
yeah.
I have a quick question, Lon.
Mhm.
It says the company Arboro is not on title,
Exactly.
and there is no lien.
No lien. There's
So,
a lien like a hot water tank heater lien.
okay, so there is a lien on the
It
property.
it is a lien, but it's not a second mortgage. It wouldn't register
Not a
like that.
mortgage. It's just a lien. Okay.
Just
Okay.
a lien
Wanted
like
to
a hot water.
clarify because I was wondering like how Arboro is protected.
Yeah, because you don't want to sell it and say, "Oh, sorry, I didn't tell you" or whatever, right?
Yeah, I
So
forgot to tell you.
yeah, no, because what we did is one of our clients, we did it. We actually pulled title to see what it showed up as. Did I tell you that? Yeah, no, I pulled it. And it shows as beneficiary. It shows as a beneficiary interest, Arboro, right? And that's basically all it shows on the title search. So good stuff.
Okay.
All right. So, yeah. Okay. Perfect. Any other questions? All right. Let's jump into. So one of the big things that one of the first things that I've seen is open houses. So what I've done is a lot of our realtor partners, even if they don't have listings, there's a lot of open houses, a lot of um, realtors are looking for help for other open houses. So they're taking advantage to connect with people coming in to get a message out. Okay. Now, if you have your own listings, okay, there is a great opportunities to leverage not only what you have happening at open houses, but also sign writers. Okay. So we've designed sign writers. I'll show you what they look like in a second. Actually, I'll go to the next slide. So here's a few people that have put up sign writers. So this particular home is the first one, I think, is listed at 2.3 million. So they have down payment assistance available for this home. Buy this home with as little as 10% down. Okay. Anything that's listed under 1.67 million, you can use a down payment assistance available for this home with 5% down. Okay. And we've included what basically QR codes, and the QR code goes in where they have to put where they heard the sign, because basically as soon as we issue these sign writers, we have a list of who has the sign writers, and they say where they got it, what street it was, and then we send those leads off to you. We would like you to be, unless you want us to, but we'd like you to be the initial contact for those leads, because I want you to be the geek. I want you to be the Yodas of this whole story. Okay. And show them that you have the ability to guide them to where they want to get to. Um, so sign writers are the one thing. So basically, this is kind of how this one would work, and the QR codes, and it looks something like this. Okay, so sign writers have been good. Now, the other thing that we've done is we designed some custom marketing. Okay, so Arborough, when we get you signed up on the Arborough side, you're going to have access to their whole portal. They have a resource center. They have some marketing stuff, but their marketing will focus on the words of co-ownership. Okay, and in some senses it is a co-ownership, but it is, in some senses, I don't see it that way, because a co-ownership, usually somebody else is on title. And the problem with the concept of co-ownership in people's minds, they're thinking, Dorota, if you and I buy a home with co-ownership, you and I are going to live in there together, right? Or you live upstairs, I'll live downstairs, and it's a co-ownership. So we use the expression shared equity financing, right? Is really what it is. So I don't want people thinking I got to buy it with somebody else. They get confused. But if you like their marketing too, you can integrate both or whatnot. But we'll design marketing with your branding on it to make sure that, and a call to action, say, ask me how this program can help you, and make sure that you have these for your open houses, or we can send a PDF if you want to send it to database, things like that as well. Okay, so open house script. So basically, the very first open house that we did. So you guys know how people sign in on your open house sheets, and they usually put the fake numbers and say they're working with a realtor and all that good stuff, right? So this particular open house script, so basically they would come in, and the realtor would say something like this: hey, when you're signing in, just to let you know, there's a brand new program that helps people with down payment. Gives you a full 20% to allow you to qualify for more. You can actually buy up to $1.7 million now, which is 5% down. So if you know anybody that's looking to purchase and needs help with down payment, please take one of those flyers for them, okay? And don't hesitate to ask me any questions. So the realtor that did this properly with that particular script, after the very first open house, they got 2 calls from people that took the flyers, went home, looked at it, and they called back and said, can you tell me more about how this program works? Okay. Sometimes realtors do their own script, and they say, hey, if and what happens, it's the error is that, hey, if you need help with down payment, grab one of those flyers. And that's the wrong message, right? And I had one realtor I just talked to and said, hey, what's the message you said? And she said exactly that. And they said, well, everybody that came in said, no, they have a 20% down payment. And that's not what you're after. You're after people that they know, right? So if you know anybody that's looking to get into a home that could use some help with down payment, please grab one of these flyers for them, right? And if it happens to be the people in the open house, then that's great. But usually it's could be somebody else that they know. Okay, maybe they're a neighbor that's just coming to see that open house because they're nosy, but their sister-in-law might be buying or thinking of buying, but down payment is an issue, right? So basically what you're doing is you're planting seeds for people to be able to replant those seeds somewhere else. Okay, even with your so for example, now I have some of the realtors saying, you know what, oh crap, I have so many clients that I put into rentals. And why did I put them into rentals? Well, maybe because they didn't have the down payment. What a great message to reach out and say, hey, just checking in, seeing if you're doing okay. Do the same script. Oh, by the way, there's a new program that helps people with a full 20% down payment. Who do you know, okay, that might be looking to get into a home, but could be struggling with the down payment or need help with the down payment? And that's a better question than saying, if you know anybody that's looking, because if you say, who do you know? They're going to think, okay, who do I know? Right. And if they know anybody, they're going to say it. We do like a 15 and 20 or 15 and a 30-day post closing on the mortgage side. So did a Zoom meeting with these clients, and I asked them if payments were coming out, any questions, everything else. And everything was great. They're all excited. They're all happy. And I said, oh, by the way, there's a new program that came out. Okay. And I gave this whole sort of dialogue. And I said, who do you know that might be looking to purchase and might need some help with down payment? And they both looked at each other and they said the same name together. And I said, great, could you do an introduction? Because maybe I'd like to get some information out to them, because they might not know this program exists, right? So the wording is so important, right? So, if you do the Buffini thing, oh, by the way, I'm never too busy for your referrals, it's very generic. But if I say, give a specific value, okay, that they've never heard this before. I guarantee you, anybody that you're telling, they're gonna tilt their head and say, "I don't understand," because we've been taught you always need, especially over $1 million, you always need a 20% down payment, right? And anybody that's not there, they're not even thinking it. Or how can we increase your purchasing power from 600 to 800,000 by getting you a 20% down payment? Okay. The other thing that I noticed too, so those of you, if you look at the condo markets and everything else, it's competitive out there. So how do we make our listing stand out? So one of the things with MLS is you always have to be very careful. It can't be like you're marketing yourself. Okay. It has to be relative to the actual property. Okay. But on a particular property that qualifies in the area and the actual value of that home, nothing wrong with if you got two properties and this one says down payment assistance available for this home. It's all you need to say, right? And then they can start getting, you'll start getting inquiries on that one as well, right? Social media is huge too, right? So how to be disruptive. And this really is, it's about getting you guys to be disruptive in the market. You're like swimming where everybody's swimming the same direction. You're going to be swimming that opposite direction with a different message that people are going to say, what's this person talking about? And I did a post on, so I don't know if you guys know the real estate hacks. So there was a post on there. I did an update on that. And then there was somebody that took that post and put it in, because we have our own called I Love Mortgage Brokering, right? And they put it in there and they said, hey, somebody put this post, and they said, how is this possible? And one of the responses was, well, that broker must have done his exam in crayons, because that doesn't exist. And that's the way our industry is, because we have to keep on top of everything. You don't need to know everything about this program. You just need to know, here's an option for your clients, right? You need to know, here's an option for a message that you can get out to potentially help you, get more people into your world, right? And if that makes sense. All right. Any questions? Okay. Ideas? This is good stuff, I hope.
Yes, Lon, I have a quick question.
Yeah.
So is there any minimum amount of the property value?
Yeah, property. So minimum property value is 550,000.
550. Okay, so between 550 and 1.7.
So between 550 and 1.7, there's 1.67 actually
1.67,
for 5% down. But if you get over the 1.7 million, you need 10% down to get up to 2.5 million.
Right. So under this program loan, now the homeowner, they bear all the expenses, utilities, property tax, if there is maintenance fees, everything is borne by them, as if it's their own house.
It is their own house. It is their own house. So the other thing, and I didn't mention it here, and I know one of you were going to ask, okay, so what if I renovate, right? Because I don't think I have that in here, do I? So what if I renovate? So what does that mean? So basically, Arbro they'll have a renovation. There's a application you put in and they'll give you a credit for the expenses that you put towards those renovations when you sell the property, right? So there's always an advantage, and they consider that because you're going to increase the value of the property. Why would I spend money if I'm not going to have, if it's going to be my expense? And yeah, both you'll benefit from the increase of value, but you'll get reimbursed for your expense, right? So on the closing, so they have programs like that as well when you get into it.
Thank you so much, Lon. I have to go for a meeting. Is this
Excellent.
going to be recorded? I mean, are you going to share the recording or something?
Yeah, it's recorded. And like I said, if you have scanned any of those QR codes, there's the quick little form. Anika's going to reach out to you and just do a quick, sort of 10-minute call, see if you need help with the onboarding onto Arbro, see what other marketing you get. So she'll reach out individually, and that's what we'll do. Okay.
Absolutely. Anika should have my email address because that's where I received my link to the
sure.
The
yeah,
meeting.
We'll reach out.
Yeah, we'll reach out. Yeah, we'll get it for sure.
Great. Thank you so much. Appreciate it.
My pleasure.
Brian, Brian, did you want to unmute yourself? I know you had your hand up.
I did have my hand up.
Hey,
Bart.
Brian.
How
What's
are
up,
you?
man?
I gave him a card to enter.
Anika, are you related to Joe?
Pardon?
Are you related to Joe Mystery?
It's such a common last name.
Okay, never mind. Okay, I think you answered my question, but Lauren, if I wanted to, am I able to talk to you off Zoom about? I'm doing a very strong Google campaign, and I want to use this program in my drip campaigns for all of my CRM and for my social. And do you have some good tips that we can do together to make it really effective?
Yeah, so basically what you give me an idea of what type of material you need. And again, we'll do it because again, I want your information. I don't want my information on, I just want you. I want them to go through you to get to us, right?
Right.
And because again, I want you guys to be the king of the world. Like you guys are the solution provider, right? And I want them to say, why did Brian have that solution when Joe so and so didn't even mention it to me, right? Because
Right.
I want anybody that we're connected, we want you to bring as much value to the people that you're serving as possible, right? So
Okay.
so we'll create the marketing around that, but I think what we'll do is I think what's really important is the scripting and the messaging where people will connect, because I've tried different messaging and it's like just turning the dial a little bit and it's different, right? And so we'll work on that, but for sure we'll take it offline and meet after and go through that.
Um, just a little confusion. So, but how don't we work with you to do this? Like, doesn't this benefit you?
Yes.
Oh, okay. Okay. Yeah,
What
that's
I want,
okay.
but because basically what I want them to do is I want them to reach out to you and they're going to say, Brian, can you tell me about this program about this? You apparently now I can buy with less than 20% down, and you're going to say, yeah, absolutely. I'm going to have Lauren from my finance division reach out to you, and he's going to explain the whole program to you, and then we're going to
Perfect.
reconnect. So I'll give you the scripts for handoffs and everything else. But I just
Mhm.
want you to be the gatekeeper. I want you to be the face of the solution, right?
Are
I don't.
there slides that would work with this with my listing presentation?
Yeah. Because I have a presentation that's designed for consumers. Like if we do, we do ones for buyers. Okay.
Okay.
Yeah. So we'll integrate. Depending on
Okay.
what it is, we'll do that for
I
sure.
love this. I love this. I'm doing a
It,
really strong Google campaign right now, so this is going to really give it a really great shot.
it'll give it a boost because it's something different, right? It's something
I
that's
love
going to
it.
stand out.
I'll
Yeah.
wait for your call and I'll meet up with you. Okay.
Perfect. Sounds good. Okay.
Thank you so much.
No problem, Brian. So a
Yeah,
couple of things.
Lorne,
Yeah.
can you hear me?
Yeah, I can hear you.
Okay, I have a quick question over here. So, other than this, the down payment solution you're giving, definitely for the mortgage, the other factor should be the family income. So, according to that, how that thing will work means for the qualification of the mortgage.
Yes.
So-
So basically, you're referring to the chart that I was showing you?
Yes, definitely. Because if you're saying up to 1.6 or 1.7 will 5% down, the income should be around 200K. So that is only possible when a family income or the person who's coming on the title have an income of 200K yearly. Okay. So, but if
Yes.
they have less income, definitely the affordability will come down.
Yeah, absolutely. So I'll explain, so what we do is when we get the application, we look at where the income is. And the difference is, I'll kind of tell you the quick underwriting thing behind it is normally if they have less than 20% down, the maximum amortization on that mortgage is 25 years. So now we're going to have 20% down. So now we jump it up to 30-year amortization, which is going to increase their mortgage qualification amount. So
That's
we're going
right.
to qualify them for the maximum mortgage that they'll qualify for, just like any other lender would. Okay. And then now we're going to add 20% down payment on top of that to come up with the new purchase price.
And this mortgage will be from any A lender?
So right now we're using Equitable. We're using the alternate lenders. There's two alternate lenders that are doing it, and the A lenders are probably be about 6 months behind.
Okay, 6 months after
Yeah,
this mortgage is done.
and interest
Okay.
rates difference between them is not really that much right now. It's about 0.75% difference.
Okay, my third question is this program, some of the programs is for the pre-constructions also?
Yeah, no. Okay, so that's a good point. So this is only for existing resale homes. Okay.
Mhm.
You don't have to be a first-time home buyer. Okay. It's just has to be your principal residence.
Okay.
And we can't do pre-construction. And the reason why, because I reached out to them and say, hey, listen, I got somebody in occupancy, it's going to close. They could really use this program because the issue is because of the shared equity portion of it, it affects HST on new builds.
Mhm.
So it almost eliminates the client's ability to actually claim HST back because there's it's just to do with that equity share. Okay. So that's why we can't do new builds, right? Nothing to do with anything else. It's just other than the HST is a huge factor. There is a way to do it on the negotiation side of it, but they haven't opened that up yet. Like if you're negotiating with the builder to add a certain clause that would prevent an issue with HST. But if I already have a purchase and sale already done with a new builder, then it's already in there. It can't be changed, and they're going to get messed up with the HST on the closing.
Okay,
Yeah.
my next question is about the marketing of this one. Do you have any, like as you have shown, one of the slide was showing the what do you call it, a flyer or something. So do you have something like that which I can advertise it in a full scale for this program?
Yeah, 100%. So on those info packages or whatever, it's going to ask, what would you like? And then we're going to reach out and we're going to get you to send us your high school picture that you guys usually use in all your marketing. I just kidding. And we're going to add that to the flyer and put your contact information, send you the PDF. And if you're doing particular open houses, we'll do some printed ones for you as well.
Okay, great. That's all for now. Let's continue to whatever you're trying to, whatever the information you're providing. So if I
All
will
right.
be having any further questions, I will interrupt you.
Awesome. Okay, we're almost wrapping up here. So one is you have to be signed up as a realtor to get access to this program. Okay.
Okay.
So you have to be registered. And obviously we were only one of two brokerages that were able to submit these in Ontario for the longest period of time. They're slowly adding some more brokerages, but there is a process to it. And the problem, if you don't understand the process, it can be an issue. So what happens when you're working with Arboro? So here's a few differences when it comes to when you're representing a buyer. Okay. So one is, let's say your buyer gets pre-approved. Okay. We get you the pre-approval out and say, this is the amount. Arboro confirms it. And now you want to go make an offer. So basically, like you would do a CMA on, on a listing, whatever, you're going to send Arboro, say, okay, here's the property we're looking at. Here's the CMA. You send it off to Arboro. Okay. Usually what happens, it's less now, but when the market was crazy and you couldn't put a condition on financing in and stuff like that. So Arboro, what they would do in those cases is they would say, okay, we'll give you a maximum bid price on this home. So they'll know the value and everything else to say, this is that home. So when you're going in, you can go in and say, okay, I don't need the conditions because I have the maximum bid price guarantee from Arboro. Okay. Now that there's the market's changed, almost every deal we see right now is conditional on financing because they want to make sure it appraises and everything else. Okay. Couple of other things on this. There has to be a minimum of 40 days before closing. So it can't be a quick close or anything else. And there has to be a home inspection clause. All right. Now, there is a home inspection clause. I won't read it. Well, there is a home inspection clause that they do offer if home inspection is going to be an issue on you think of the seller accepting the deal or not. They do have a sample home inspection, which basically at the end of it says the buyer acknowledges that the inspection is for information purposes only and further acknowledges that there will be no price adjustment or abatement for any reason, including but not limited to issues arising from the inspection report. Okay. So that one you would only use when you're in that situation like 2021. We had multiple offers. You needed offers accepted. Seller was going to say, listen, this is a home inspection. This doesn't. I don't want to have the risk. This was that clause that went in that eliminated that risk. But at the end of the day, what you really want to do is you want to make sure your clients are protected. Right now, the environment's good to put in, home inspections and condition on financing and everything else. Okay.
Lonnie, one more thing over here, as you were
Yeah.
talking about the appraisals. If the appraisal after signing comes less, in that case, what will happen?
So one of the things we want to do, that's why right now making things conditional on financing is key, right? Because it's an issue. If you're about to say something.
I was gonna say, so Arbro also asks you, so once you sign up with them, if you're looking at a specific property, they actually ask if you email the MLS to them. They actually help you vet the property and give you a max purchase price as well. So that should hopefully fit within the parameters of what the appraisal would come in for. So Arbro will help you pre-vet your maximum bid price on the property.
No, but the thing is that appraisal will never be done by the buyer or the borrower. Okay, it will be done by the bank's.
It'll be done by the lender. Yeah.
Yeah. So what if there is a difference of 50K or maybe more than that?
Yeah. So you know what? I'm gonna double check with Arbro on what they're, because back in 2021 where they had to have, it was all, they didn't have condition on financing periods. They must have had situations where there was a difference in if they said, yeah, you're okay, here's your maximum bid price, and what if it was $20,000 less? Did Arbro make up the difference for that? Right. So I'll have to find out if that was the situation. For now, in this environment, please just make it conditional on financing and home inspection, just like you would most of the other deals we're seeing right now, right? It's the best way to protect our clients right now. We'll find out in those situations when they were doing max bid prices, if they ever had appraisals come in less, what would happen?
Okay.
Yeah. All right. Good. So here's what your next steps. Obviously, you can email, scan, whatever you want, but just reach out. And we'll reach out to you guys too, to kind of get you started, because when I did that quote in the first part where she said, she made over $25,000 in commissions within the first 90 days of learning this. So it took, sometimes you got to get comfortable. You got to really understand the program a little bit more to say, okay, I get it. This makes sense, right? So our role right now is to help you just kind of answer those questions and make sure you understand, how to apply the conversations, right? And then really, you'll understand, you get more confident with the program as it goes on. But it's something that could be somewhat of a game changer, because if you could use this particular program, once you get good at it, and what if you were to close, 4 to 6 extra deals a year just because of this program? Like, what would that mean to you financially? What would that mean to your family? What would that mean to the families that you're helping get into a home that thought they were going to be years away? So these opportunities, obviously, they're here. And understanding this program is great, because I guarantee you, if you go call your buddy and say, tell me about, shared equity financing, whatever, they're going to say, I don't know what you're talking about, right? I'm assuming a lot of you, this is maybe the first time, or you're learning more about this now. You didn't know about it really before, you maybe just a little bit, and hopefully this helped.
Yep. Definitely it was helpful. So I will register it and we'll be looking forward for more information. So let me review that, and then we'll start marketing.
Sounds great. Okay. Any other questions we got, guys?
Yes, so I actually registered. So should I wait for the information from you guys, or should I call you tomorrow? What's the next step?
Nico will reach out, right?
Yeah. Dorota, did you register with Arbro or did you register using the drop form?
No, through the form that I just scanned.
I will reach out to you. I'll give you a call tomorrow.
Beautiful. Thank you.
Awesome. All right, everyone. That's perfect. Okay. Hopefully this was informative. Any questions, reach out. And I know we went a little bit beyond 3, but I appreciate your patience on that. So, yeah, again, this is again a good program to leverage. And again, just getting the right messaging out could help you get a lot more business. So hopefully it's good. We'll reach out and then we'll go from there.
Okay, thank you so much. Have a
All
wonderful
right.
evening. Bye.
Thank you, guys.
Thanks, everyone.